All right, and welcome back. Here we have another case study. I've been live every single day, and I will be live every single day, just back testing. But as well, I'm gonna try to do case studies, but I'm not sure. I feel like that's kind of a lot, but we can just do the case studies in the back testing live sessions. As always, I'm developing a student, and these are just my interpretations on price to ICT. Let's get straight into it. As we see, we have a buy model here, and I also want to go over new day opening gaps and new week opening gaps because I've been back testing this a lot, and I'm gonna have a back testing video on this as well because I like it just kind of like opened my eyes, but it's also something that I can't get too like caught up in. So here we have a buy model here, and here's what the buy model ended up happening. We're within this fair value gap for 9 days. 9 days within here. We come back down to this fair value gap, and we came right to a level that I was anticipating us to get bought back up, and we end up heading to buy side here. As we can see here, this is the 4-hour chart on mini S&P, and then this is a 4-hour chart on Nasdaq. As you see, if you didn't see by now, we have divergence here. Notice as well here, we have a fair value gap in, fair value gap out, BPR right there. This gets respected very nicely, and souping this low here. Also looks like an optimal trade entry up to buy side. And here we have the 4-hour chart returning right to that order block here. Institutional buying here. Failure swing, failure swing, failure swing, failure swing, failure swing, failure swing, failure swing. We come up here. We have a rejection block. Boom. We displace lower. Then we come back. Wicks, 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 wicks. Then we come into here. And if we go to the if we were to swing grade this, we have your implied dealing range here. You have 75%. We never come back down to a deep discount. We just remain in a discount level here. We're allowed to buy that again. Banks are allowed to buy that again. Notice how here we drop down into a discount, but you're not really taking liquidity. I mean, yeah, we're taking this here, but we're coming back down to this order block. That's where we want to go to. That's where it wants to reprice to, and then we just end up rocketing after doing that. And here's the hourly chart on ES. And as we see here, we have SMT and then SMT. So we have double SMT within the market. And here, I also want to do that case study on just like new day opening gaps and how I've found, and I was backtesting all day today. It does not matter how long ago they were. ICT says refer to 5, but I found that where I've been figuring out that, and I've been trying to find a system to kind of recalibrate a little bit better, but every new day opening gap is going to be influential no matter what. And that's just what I've been backtesting, and I'll have a little backtesting session. So if you don't believe me, we can sit down together, and we can look at price action. But that's not for this case study here. So we have SMT and then another SMT. So we have two SMTs formed within the market at that higher time key level. And notice where ES is at the time. New day opening gap, constant encroachment, and then we just end up exploding straight to buy side here. So delineating how long it took. 12 days, 3 hours, and then 1 day, 5 hour here. And I'm kind of ignoring all of this price action. I'm kind of viewing it as time distortion here. We're not really doing anything significant. We're not breaking out of this dealing range. We're not breaking out of this dealing range high or this dealing range low. We're kind of just time distorting. Then we come up, we refer back to this rejection block, and then we end up displacing lower, coming back down to that area of institutional buying, forming an SMT within the market, and then we end up just displacing higher here. All right, here's the last manipulation leg here. Map that out. Negative 1.5 gets respected very nicely. Here we have a breakaway gap to a measuring gap here. Projection. Negative 3.5 gets respected very nicely. So there's that projection. Notice here, this is happening within 25% of the dealing range. And then this measuring gap is happening within 50% dealing range. And then we're consolidating around 75% of the dealing range. All right, and here is ES here. We're drawing into that we're drawing into that new day opening gap. Consequent encroachment gets respected perfectly. After we manipulate below midnight open, we have a fair value gap in, fair value gap out signature. This is a balanced price range. So the fact that we have a fair value gap in the outside, we're consolidating here, we're trapping traders here, we're forming S&P within the market, we're exploding higher. This breaker is going to get referred to, and that's what we end up doing. And we have another new day opening gap, or this might be a new week open. I think the new week opening gap's green, and I think this is the current new week opening gap. I don't know for sure, but I kind of treat them the same. And we end up displacing higher here. And we end up accumulating around 75%, and we end up displacing higher here. So here is the second stage of accumulation here. We end up forming SMT at a key level within new day opening gaps, and we end up accumulating higher, pushing up to the drawn liquidity, meeting our standard deviation projections there. And I will note that this day right here, this was actually today, and today market closed at 1. Market closed at 1 p.m. So I didn't even look to trade this, but although it's still like price is still gonna react how we anticipate it to. But it was a half day today, so I wasn't really trying to try to really tape read per se. I just didn't. I've never really tried to trade half days, so I probably won't ever either. But as we see, we had nice delivery there to buy side. So here's what I want to know. I've been backtesting this as well. I would recommend pulling up to those streams, maybe watching them. They're pretty good. They're pretty good, and I'm gonna do those every single day. I don't know how long. I'm gonna plan on doing like some longer ones as well. But here we have a order block right here, and then we have another order block confirmed. So we have our propulsion block here. So we can expand at 9:30. I backtested that. Technically, you could say all these 3 down close candles are an order block, and technically we're above order block. But we do have SMT at the lows, and like the narrative is there. So therefore, it's less likely for 9:30 to manipulate since we already have manipulated. And I don't know if I really like that, but technically how I view it is, hey, this propulsion block confirms order flow, so therefore 9:30 we really shouldn't see a Judas because we have bullish order flow here confirmed with this propulsion, so therefore we don't really need to manipulate. All right, and I'm noting to that new day opening gap right there. Look exactly where we end up expanding from. We have the order block change state delivery on the 1 minute. It's all fractal, and then we end up displacing and displacing and displacing here. And here is some new day opening gaps here, and just look at. I mean, I don't know about you. You can form your own conviction. I'm gonna backtest this a lot more, but I mean, just look at where we repriced to. And then here is the second stage of distribution. This is on the 1 minute. We didn't have a propulsion block here on the 15 minute. Sorry, I think I have a different slide on that. I swear I do. But this is the 1 minute chart on E-mini S&P. We end up forming SMT and they're displacing higher at 9:30. So 9:30, we actually get another 9:30 expansion higher, and we come back down. We retrace. We have a 10 a.m. news whipsaw right here, stopping on both sides of the market. And we end up drawing higher there. And here is that same fractal? Yeah, that's that same fractal price on S&P or on NASDAQ, sorry. So that there's this on NASDAQ, on E-mini S&P, and then this is on NASDAQ. This is just a 2 minute chart. We end up forming SMT in the market. We're at new day opening gap. Market's going to want to reach back towards that. And we end up displacing higher here. And then notice that signature as well on NASDAQ too. I don't know what happened to my slides. But yeah, that was kind of the market maker model that we had. It was a pretty slower delivery to sell side, and we had quick and snappy delivery to buy side. So this is a Wednesday. We do have a bank holiday tomorrow, and then we have NFP Friday. So honestly, we have NFP Friday. So I think that since we've already delivered to buy side, we're definitely gonna just consolidate tomorrow for that bank holiday, and then we could get a wild move all the way back into this fair value gap here. But let's see what the market shows us on Friday. But anyways, that was the market maker buy model that we had.